Hi, it's Larry Gaines, Power Cycle Trading. I wanted to talk to you a little bit about seasonality in this video here today. Now, if you're not using seasonality, then you're probably missing out on a lot of great profit opportunities for trading. Seasonality is basically simply a market's tendency to move in the same direction each year in response to annually reoccurring some type of fundamental factors that affect the market to one degree or another. So it's something that tends to happen based on supply-demand factors, but it does happen. And if you can catch these seasonal trends, these things are a great way to make some really great profits. So, for example, here, this is a seasonality report that study that I look at for a lot of different commodities. But you can see here, this is on crude oil, and you tend to get a seasonality push to the upside here, starting in mid-February, early part of March, and goes up into potentially mid-April. So that's something to be looking forward. Now, one thing about seasonality, though, to trade seasonality, you need to also combine it with the directional trading model because sometimes seasonality trends can start early or start late. But the fact is that when they do start and you can get in, they offer great opportunities. So here's an example for crude oil, starting in February, trending up nicely on a seasonal basis. So this is a 5-year time frame on the red line and 15 on the black. Brent crude oil, kind of the same thing. February, you can see it has a nice seasonal move to the upside. Here's natural gas, fantastic seasonal moves here, early September type time frame. Natural gas, another nice seasonal move in March. Gasoline tends to have a nice seasonal move in January. And then you can look at, gold, nice seasonal move early January. And also another seasonal move in mid-July for gold. So these are all things that you can watch. Now, the other thing you need to look at is the timing of that seasonal trend. Now, for example, in this seasonality chart, you can see that gold tends to have a little bit of a seasonal edge to it to the upside starting in early Jan. So on a 5-year time frame, nice, seasonal push to the upside and over a 15-year time frame. Now what you really need to do then is combine it with a nice directional cycle type indicator system, and let me show you what that looks like. Now I've been getting a lot of emails from members of my trading club and clients asking me, well, why is gold going up? The dollar has been pretty strong, which is kind of a headwind, but gold's going up. Well, a big part of that answer is seasonality. So you saw from that last seasonal chart that gold tends to go up in January. And then if you have a directional pricing indicator or model that you can use to time the entry, you can get some great profit potential. So here's just using my cycle model here, Power Cycle Trading Model. You can see back, this is January 2013. You can see a nice cycle trend to the upside here. And this is currently January 2015, currently cycling to the upside right there. So just kind of a review again. Here's actually this is January 2014, cycle move up. Look, you can see gold started from the cycle low about 1192 and got up to as high as 1258. So that's a seasonal move, and this is also confirmed by my trading model. That was last year. Now here's this year, starting January 1st. Look at it move up, 1173. Now we're at 1223. So the seasonality is something to take advantage of and look at. And if you'd like to learn more about seasonality and how to trade it, I'm going to have a free webinar this coming Thursday, and let me give you some details on that. I'm doing a free webinar. It's on seasonality, cycles, and trends. It'll be this coming Thursday, January 15th at 8 p.m. Eastern. Now on this email, on the link below, you'll see a registration link. So sign up for it, get in early, because it's going to also be an interactive webinar, and these fill up fast. Now, let me show you some of the things we'll be talking about. So we'll be looking at the global outlook for hard commodities and how they're looking right now. We're going to also look at how to identify new market cycles and trends, some simple steps to find the highest probability seasonal trades, how to use Fibonacci analysis for market timing on these seasonal trades, and some of my favorite seasonal directional systems that I use for trading seasonality, and a lot more. So join me. Again, it's this Thursday at 8 p.m. Use the link below to sign up, and I'll see you there.